Hello and welcome to the one-stop shop where you can rub shoulders with an extraordinary group of men. India's tryst with its economic destiny began with these bulls taking charge of the Lal Street. Learn the incidents and the inspirations that helped shape them. Join me, Ramesh Damani, as we morph into the minds of the wizards of the Lal Street.
I believe India is a runner without shoes. We have no infrastructure. We have a stifling bureaucracy, a lot of corruption. In spite of that, we are where we are.
Well, thank you so much for joining me on the Wizards of the Lal Street.
My pleasure, Ramesh. It's a privilege.
There are a few characteristics which we look when we make investments. First is management.
Really?
It's entrepreneur.
In equities, if you ask me, there are three things which matter, whether there's fear, how's the valuation, and third is what is the flows.
I would say technically, we are in an absolute bull market. We are in what is going in the start of a bull market.
Wow, what an endearing walk down memory lane. Welcome to a special show with a man who needs no introduction, market maven Ramesh Damani, who's joining us today as a precursor to the launch of his highly successful 2-decade-long series, Wizards of the Street. Ramesh, I just noticed, in the last 17 years, the weight has been shared, the mustache has been shared. What else?
And I've lost a lot of hair. No question about
Created
that.
a lot of wealth as well, right?
I hope so. It's been a nice journey.
Yeah.
Thanks, Nimesh.
Absolutely. I mean, 17 years, right? So how has the personal journey been for you from the first show to now?
Well, it's been extraordinary. Just to take you back a minute, I joined the markets in 1989. And imagine if you went to America, say, and your three people who live three neighborhoods down from you were Warren Buffett, Charlie Munger, and Peter Lynch. What a great time you would have learning from these masters. And I was so extraordinarily lucky that when I came, among the first three people I met in the markets were Chandrakant Sampath, who taught me compounding, R.K. Damani, who taught me not about valuations, the kind you need in the stock market, but about values, how should you lead your life. And of course, Rakesh, who taught me how to bet fearlessly, how to have conviction in the trades you got. So I was extraordinarily lucky when I came to the market. These were among my first few best friends. Then they introduced me to a wider circle of friends, Durgesh Shah, Inam, Vinod Sethi, and so on and so forth, all of which have been so extraordinarily privileged and lucky to introduce on the airwaves, along with some great international voices. When we first started talking to them, they were not known to India. Mark Faber, Jim Rogers, Michael Steinhardt, Ken Fisher recently, all have had extraordinary careers on the Lal Street or Wall Street. And it was truly my honor and privilege to bring them towards the Indian audience, their investment styles, their hopes, their ambitions for the first time. So thank you for an extraordinary privilege.
But Ramesh, this is something which we're going to discuss in the second segment as well, as to which are the new names that you're going to feature in the upcoming series. But looking at your own journey, we all know that you moved from Wall Street to the Lal Street. But not many people know that even you as a young investor then, you've lost money. Your dad gave you some $10,000 and you lost that out, right? And that was the first learning experience for you. So, walk us through that lane of being from Wall Street to the Lal Street.
Well, Nimesh, as I mentioned, it's very important to have good mentors in life. Yeah. And when I came, the index was 600. Today it's closer to 60,000. So it's been an extraordinary journey. If you stayed invested, you made a lot of money in India. And I learned, like I told you, from the feet of the masters. I mean, I learned from the names I mentioned to you. And Chandrakant Sampath, for example, taught me compounding. So he taught me how to hold long and remain invested. I think what distinguished my generation of investors from some other generations was that before the Lal Street was a cesspool, a backwaters, if you will. These new generation of people, Nimesh, RK, Rakesh, believed that you could buy good businesses and with India's prosperity they would grow. And I kind of latched onto them a bit later on. But I realized that was the way to create true wealth in the stock market. So I think till maybe 92s or something, I was also a broker on the Bombay Stock Exchange. So I tried to make money doing brokerage back and forth. And then luckily for me, Infosys went public.
Yeah.
And because of my tech background in America, I kind of understood the value proposition they have offered. And even, you know the rest of the story, even if we bought a few thousand shares of Infosys, they went up 1,000x over the next 10 years or so. So they gave us an extraordinary amount of wealth and privilege. And we're truly grateful to Narayan Murthy and Nandan Nilenkani and all us. So it's been a very good journey. I mean, anyone who believed in India, anyone who remained invested, did extraordinarily well. And if you did a bit of stock selection along the way, got into a bit of tech at the right time, got into a bit of FMCG at the right time.
Consumption at the right time.
I think you've done really well.
Yeah.
And the good part, Ramesh, I'm sure you'll be here, that I think the next 30 years promise to be more exciting than the last 30. And last 30 have been very exciting.
I don't know what can be more exciting than sharing perhaps the same backyard with people like Warren Buffett, Charlie Munger, at least being in their presence, right? I mean,
I know.
If the next 30 are going to look even better, then I'm waiting for it. But you were talking about Infosys, and that was one of your big picks way back in time, original picks. You've had several others, whether it's United Spirits, some other mid-cap IT companies. What has your biggest learning been from the stocks that you chose?
Yeah, I think the key is, for me, has always been, to find value. I mean, you want to, it's like your mother taught you to shop, ki rupi ki cheez athane mein khareedni chahiye. And that's the same true in the stock market. You want to buy cheap. Now, fashions come and go. Sometimes it's eyeballs, sometimes it's replacement cost, whatever. But you buy good businesses and you're willing to hold them for the long time, I think you'll do extraordinarily well. And what these gentlemen taught me is that unless you risk running very far, you don't know how far you can run. And the trick for me has always been to push myself to buy bigger positions, to, there's a saying on Wall Street that bulls make money, bears make money, but pigs get slaughtered. But that's not quite true, because sometimes you need to be a pig in the market. When the conviction is the highest, when the trade is at the best point, you need to bet big, and then you need to know how much you make. You cannot really get really rich on Wall Street or Dalal Street by buying 10,000 shares or 25,000 shares. Occasionally the market flashes a neon red light to you, and with your experience you should be able to pick it out. And I think that's been the biggest learning, that you learn how to compound your money, and you learn that when the iron is hot you have to strike it and then go in for the kill and back up the truck, as I say, to buy it.
Ramesh, I know buying value stocks at a cheaper rate also sometimes is a trap, right? And you learned this hard way through MTNL. I guess your top three losers would be MTNL, MTNL, and MTNL, right? So, tell us that experience as well, because that is something which investors should learn, to know where to cut your losses, how to not make the mistakes again. So, what has been MTNL learning for you?
Ramesh, I'd rather get a root canal than talk about MTNL, but since you asked, I will tell you that.
We can learn from your mistakes.
Yeah, I hope someone does. It was, you're going to lose money in the market. I mean, that's, the nature of the business. You're going to get a few things wrong. And in my case, it's centered around MTNL. Ramdev often talks about value migration. And there was a clear value migrating to private telecom players, which we didn't understand. True. It just seemed cheap. And so you kept buying it and buying it. But to come back to the learnings you talk about, Ramesh, maybe you lost 90% of your money in MTNL, which I probably did. But sometimes you make 10 times, 20 times your money in the winners. So what Peter Lynch taught us is so true, that you water your flowers and cut your weeds. So maybe I didn't sell MTNL at the right time, but still the loss was something I could manage, because the profits from the good stocks so much outweighed the loss. It did teach me one thing, is to remain diversified and not to go whole hog on a particular stock. But that's an art form that, I think I'm still learning. I'm still trying to, bet on a smaller basket of stocks. It's a hard task, but, I'm still young, what the hell.
Let's flip it, let's brighten up the mood by talking about things that worked for you, perhaps.
And maybe it's going to work in the future as well. So
I remember on the Diwali show is when Ramesh spoke about defense PSUs. Rail PSUs, and they've done extremely well. But when do you decide is the right time to exit? Because these are PSUs at the end of the day. They haven't really created wealth if you look at it over the last 2 decades.
That's a misnomer, Sonia, and a lot of people say that. I mean, for example, just when I started the Wizard show for the first time, I used to buy Bharat Electronics. It was a 20 rupee stock with a 2 rupee dividend built in, 160 crore market cap. It's 60,000 crores today. And I think it can go perhaps double from these prices too. So, I mean, it's created long-term wealth. The mistake people make often is to bunch FMCG stocks versus all PSU stocks. These are all in disparate companies. There are some commodity stocks, there's some power stocks, and some defense stocks. So you need to learn how to pick the sector in the PSU that you're bullish on. I think the mistake a lot of analysts make is lumping them all together. So obviously you're going to come out with disappointing results. What if I bunched Himachal and Global and all those bad consumer stocks along with the levers and the Dowers of the world? Your returns wouldn't be that great. So I think that's a trap that a lot of people fall into. And these are good stocks, these are great businesses. The government, if you hear the Prime Minister speak or the Railway Minister speak, they're going to use the railway and the railway budget as a blunt axe for capital expansion. They're just going whole hog on these places. They're going whole hog on defense. I mean, for example, let me give you an example on defense and why it matters to India. The US produces 150 million artillery shells in a year. That's what Ukraine uses in a couple of weeks. So there's a huge shortage of defense equipment. And here these companies are already producing equipment and threatening to do more so by Atmanirbhar Bharat going more domestic source. So there's a great opportunity. They have good order books. They have excellent technological skills. And we are buying them literally, as I said, rupee ki cheez chavandi mein, not even athandi mein. So, we're very confident about the play out in these sectors. So, I mean, there is a time to sell, I'm sure, but I don't see that yet.
Okay. Ramesh, you spoke about defense PSUs, you spoke about real PSUs, but the other one sector which has been very close to your heart is the consumption theme. You've always bet on large consumption themes. United Spirits was one of your top pick way back. Looking at a change which is happening in India with so much of young urban consumption going on, anything that excites you in this new journey, the fintech companies or the new platform companies, anything that stands out for you?
It's a good question. A lot of what's happening in India excites me, and the reason for that is by just a freak of coincidence. We're at the right place at the right time. It used to be the world was divided, that China would produce everything and America would buy everything. Both got rich doing that. China would recycle its money into the US Treasury bills. Inflation remained low, interest rates remained low. A similar meme played out in Russia and Europe, where Russia gave gas, $20 billion of gas, which was free for them. Germany created $2 trillion of economic output for that. Now the world has changed. I mean, China, we used to call the so-called BRICS countries, which you all familiar with, and we now call them the TRICS countries, which is the enemy of my enemy is my enemy. So what they've taken is Turkey, Russia, Iran, China, and North Korea have formed a new bloc. So the world is changing. They need what they call not China plus one, but nearshoring, friendshoring, offshoring. I think that just plays into India's strengths, because suppose you want to set up a digital project. You need 5,000 programmers. There are very few countries in the world that can give you 5,000 programmers on standby. Chemical engineers, physicians on standby. India does that. So we are at the right place at the right time. We have political stability in our country, and we have a government that is keen to foster this kind of growth. So I'm very hopeful that there'll be multiple sectors that will do well over the next few years.
Okay, I'm very interested to know about the multiple wizards of Dalal Street that we're going to see over the next 10 to 20 years. So we'll do one thing, we'll take a short commercial break on the show. We'll be back with Wizards of the Street. Don't go anywhere. Welcome back. You're watching Wizards of the Street. This is a precursor to the show which has aired for over 15 years now, and the next series begins on the 21st of November. So do stay tuned in for that. And we have the man himself, Ramesh Damani, who's going to be featuring several veterans, market experts on his show. Ramesh, tell us a little bit about who's going to feature on your show, what stands out, what are their market leanings?
Sure, Sonia. Thank you for asking me that. The first wizard I interviewed in 2005 was, of course, Mr. Rakesh Jhunjhunwala. And unfortunately, it's ironical and bittersweet, he's no longer with us. So, and because he has such an important voice for the financial markets, I felt I'd give him an all-star tribute. So we're getting a lot of interesting guests, two-part series to pay a tribute to Rakesh Jhunjhunwala, including his favorite CEO, Bhaskar Bhatt, is promising to join us. So that would be very good. Then we're also going to reach out overseas and talk to a few people overseas. So
before that, I had to mention this because I remember last October we interviewed Rakesh at his home, and at that time Bitcoin I think was at $60,000 thereabout. It was raging, and I asked him this question. I said, "It's the new age investment. Anyone and everyone's investing in Bitcoin. What about you?" And he said, I don't even want to talk about Bitcoin.
Yeah.
And that was his conviction, right?
It was, and he said, you know, you don't have to join every party in town.
Yeah.
I remember that interview. That was an excellent interview, Sonia. So we'll try to look back, reflect on his learnings and his legacy over 30 years in the financial market. Everyone from the Prime Minister to a regular punter on the street asked for his opinion. So I'm quite excited to pay that tribute to him on that show. We're going to reach out overseas. We've already done an interview with a fund manager called Laura Gerritz, who's very bullish on India. She's put 30% of her fund into India. She has some very good insights into which are the good promoters, which are the good management companies in India. The one that I'm really excited about, which Ramesh helped me get, was what I call a master of the universe, David
absolutely.
Rubenstein. I think he got founder of Carlyle Group. He's very philanthropic, done so many great things, written a great book. I'm very excited to interview him for the show. This time, instead of just interviewing people on the street, we're also trying to broaden our search and look at people in venture capital, look at people in other areas of investing. So I think another name that we're excited to interview is a gentleman called Harsha Raghavan, who runs Convergent Finance. Impeccable track record, you know, UC Berkeley, Stanford, you know, Goldman Sachs. Now he runs his own fund. So I'm hoping to get some great insights like I got over the last 15 years from this next batch of wizards.
You know, Ramesh, one thing that I've learned working on your show is a rapid fire that you do with most of your guests. So we thought we'll reverse it and do something with you today. So
that's highly unfair.
I hope you won't mind. So we'll start with the rapid fire. Quick questions. Won't ask you too many questions there. Okay. So, you know, Ramesh, the first one. You know, one thing that maybe say if I want to ask you about Nifty from here, 20,000 first or 16,000 first, what would be your answer?
The higher one.
The higher one. Oh,
yes.
wow.
Okay, that's bullish, Ramesh Damani.
Absolutely.
Technology stocks or PSU stocks? What do you prefer?
Actually, like both the groups, but right now I'm more invested in PSU stocks.
Okay. You want to leave wealth for your next generation, or you prefer they earn it on their own?
Oh, God.
Tricky one. Watch what you say.
Yeah, I know. I think my grandchildren will be watching me. I think we should leave something for them because, you know, they should know their grandfather, but not so much that they don't want to do anything with their lives. So I would hope they would have productive lives and would also have that ambition to earn money because it's, you know, it's the ambition of a young man, and it should be the ambition of a young man to earn his wealth, to see how he stacks up in the world. So, you know, hopefully you'll give a lot of philanthropy, but also leave some for the grandchildren.
It's a tough balance, right? A balancing act.
Tough balance. Very tough balance. The minute I have my grandchildren, my arm, Veer and Arna, I'm all over them and I want to do whatever they want. So.
I'm sure. What about gold or real estate, the asset class that you prefer, apart from equities, of course?
Probably real estate. You know, gold is, I mean, Sonia, inflation last year was a 40 years high, 8%. Gold was down 10%. Yeah. I mean, that tells you something that people have moved on from gold.
Ramesh, Warren Buffett or Peter Lynch, which investment thesis you'll follow or investment style you'll follow?
You know, I get up in the morning and look at Warren Buffett's photograph probably.
Exactly.
So that's your answer.
Okay.
And your big investment bet for 2030?
You know, my big investment call or bet is that if you remain invested, you will compound money. And I think that's what I always try to do. I mean, I always tell the young people who come to me is that you want to try and double your money every 3 years. And if you do that, you're going to be rich at the end of the 30-year period that we're talking about. So the investment call is the same. Remain the same, buy great businesses, and you're playing a long ball. You know, you might have more fun trying to hit it out for a 6, but the people who really make wealth compound it over long periods of time.
And what is, I mean, all of us have regrets, right? But what is your biggest life regret?
My biggest life regret, Sonia, is very simple. You know, people call me veteran investor, old investor. My other friends are called billionaire investors. And I wish I was a billionaire. And I mean that in the nicest sense of the term. I don't mean that I need more money. I don't. But money is how you measure success in the financial markets. And the opportunity was there for me. I'm not saying that if there wasn't the opportunity. The markets have been extraordinary. The index is up 1,000x, whatever. So the opportunity was there for me. And it was, I think, perhaps my own upbringing or my middle-class background that I didn't make it to the level of some of my friends. But I hope my son does.
But that comparison is endless, right? I mean, greed is endless. And like they say, comparison is the thief of joy. So you should never feel that regret.
No, it's not regret in the bad sense of the term, that I need the money or I wish I had more money out there. But you want to mark yourself against the guy who won the Oscar or won the gold medal in the Olympics, And why not me? I mean, it's a very good motivation for myself. I realize my shortcomings, and then I can hopefully teach the new generation that you also need the magic, like Rakesh, of thinking big. He was income taxpayer's commissioner's son. He started with 5,000 rupees. He made $5 billion. That's a compound rate of 70%. We both saw the same stocks. What was, his dream, his ambition, his fire was much bigger than mine. And I sometimes regret that I didn't have that kind of fire.
Since you mentioned your children, your grandchildren, it is Children's Day.
Yes.
I wanted to ask you, what is the one piece of advice that you want to leave for the generation after you?
I think what I learned in terms of financial terms, of course, take care of your health, or take care of your grandfather, obviously. Please do that. But,
You have high hopes.
I hope not. I hope not.
I'm sorry, but we just wanted to surprise you, Romesh.
What a pleasant surprise.
Happy Children's Day to you, Ramesh.
Oh,
Hi, Ashok. Hi,
this
thank
is
you
a
for
joyous
joining.
guest for me in life. Thank you, guys.
So he was just telling us how he wants his grandchildren to take care of his grandfather. And are they going to do that?
I hope so. I hope so. He's taught them some stuff.
Oh my God. I couldn't have planned a better surprise for me.
I know, I want to ask him. I want to ask him. Acha, Ahan, just tell me one thing. Which is the 8th wonder of the world? Tell me. Tell.
No.
You know this?
Yes.
Well,
What's the answer?
bolo. Oh,
Come on, say it, son.
he knows
say
it.
it's compounding.
He knows it.
Come on.
Ahan, tell now.
What's the 8th wonder of the world?
I love how their personalities are exactly the opposite.
Oh, she said compounding, the 8th wonder of the world. This is what he learned.
Ashok, how are you feeling about the 3 generations right here?
Amazing.
What a moment you created. Thank you so
It
much.
is an absolutely fabulous
sweet of
moment.
you.
And you were trying to tell us, right, about what you want to leave for the generation in front of you. And here they are. So go
I
ahead.
leave everything to them. They have me around my little finger, so it'll be a no contest right now,
But Ramesh, it's an...
Veer, I'll ask you one question.
Yeah.
What is the investment rule that Dadu has taught you? Huh? Tell me.
Compounding.
Compounding and?
Okay, Veer, come on. Why did you say this?
Ask him whose bust is in the office of his dad. That's the question to ask him.
Veer, huh? Hey, tell now.
Veer.
Veer.
Okay. What are the rules Dadu has taught you?
Okay, what are the...
Come on.
Okay, you
Come on.
you
I'll give you a surprise. Come on.
Take this.
Come on. Okay. Take the mic.
Take the mic and say.
Okay. I'll ask you the question.
Yes.
What are the rules Dadu has taught you?
Rule number 1.
Rule number 1.
Rule number
Tell.
1. Rule number 1. What? Rule number 1?
Don't lose money.
Rule number 1, don't lose money. Rule number 2, remember rule number 1.
This is an absolute pleasure, to see 3 generations here, right here.
Yeah, I did. Yeah.
So, Ramesh, just before we end the show, I mean, here you have your son, your grandson, your granddaughter.
I'm blessed.
You're absolutely blessed, right? So, you were telling us about that one investment advice. You told us what the advice would be for your grandchildren. Your son is right here. You can advise him in front of us.
Very bad, Papa.
It's so funny.
Papa, want to drink.
Through the pandemic, he's been back for 5-7 years. We developed a closer and closer relationship with each other. And instead of me telling him, he's pushing me. He knows my regrets and he knows my positioning. So, amazingly enough, he's pushing me now to take bigger positions, to take bigger bets, to have more conviction in my own trades. So it's been wonderful. Rather than me telling him, he's been reaching out and pushing me in the right direction. So I'm eternally grateful for support.
You know, you told us, you started by saying that my biggest regret is maybe I'm not a billionaire or as much as my peers. You have your billions right here. Your wealth is right here. So happy Children's Day to all of you, and thank you for joining us
Thanks,
in the
Ramesh ji.
studio. And
You cannot count the blessings I have.
Absolutely.
I'm a billionaire many times over. Thank you.
it's priceless. Ramesh, and all the best for your new series. Thanks a lot for joining in. And you folks, stay tuned. 21st November is when Wizards of the Street rolls out. Keep watching CNBC TV 18 until then. Thanks a lot for watching.
Thank you, guys. Thank you.